Mutapa Investment Fund? Mutapa Investment Fund is the sovereign wealth fund of Zimbabwe, which was established through an act of parliament in 2014 under the Sovereign Wealth Fund Act of Zimbabwe, Chapter 2220. It was remodeled and renamed Mutapa Investment Fund. So we use the same act, but it was remodeled. Why was it remodeled in 2023? It was remodeled because the way it was supposed to operate in 2014, the seed capital for the fund was supposed to come from fiscal surpluses, balance of payment surpluses, and the royalties and dividends. But your guess and knowledge is good as mine. We never had fiscal surpluses. Neither did we have balance of payment surpluses. So government found it necessary and saw it necessary and fit that we need to have a new strategy. Therefore, it was remodeled that instead of the funds from the fiscal surpluses that don't exist, let's now have companies which are under government repose or vested onto the fund, which means it's become an investment fund as opposed to be a resource-based fund. If you go to Botswana, they talk about a Pula fund, which is based coming from diamonds. If you go to Norway, come from gas and oil. Now Zimbabwe, we took a benchmark of other countries like Singapore, Ethiopia. In Singapore, they talk about TENASAC, which is a grouped entities brought together, sweat their capital, sweat their balance sheets, and make money for Zimbabwe. So when you look at the second part of it, when I say the global footprint of sovereign wealth funds is quite huge in the whole world. Currently, sovereign wealth funds or funds under management by sovereign wealth funds is about 15.3 trillion. Zimbabwe only starting. So there is nothing new under the sun. Is it true? God says in Ecclesiastes, I think say we 9 or chapter 1, verse 9. There is nothing new under the sun. So what we are doing in Zimbabwe, I was here, people say that we've got questions about the Mutapa, about sovereign wealth fund. Colleagues, there is nothing new under the sun. It was done before and others are doing it where you based on the screen or this way, a platform called sovereign fund. So nothing is new under the sun. So what we are doing has been done before, it's being done by others. So let's not be left behind. So the next slide. The next slide just show you the global distribution of funds under management. The major ones, they are plenty. The largest sovereign funds are in Norway. Norway has got more than $2 trillion of funds under management under the Norway government pension fund. So you see that that's what Europe says. That's Europe there. The bigger sovereign fund there is Norway. If you go to Asia, the largest there will be China. China Investment Corporation, around 1.6, 1.5 trillion. These figures keep on changing because each day they make money. If you look at the MENA region, that's Middle East and North Africa, they are called the MENA. You are looking at Dubai, UAE, Badala, Dubai Investment Corporation, they are there. So those are the largest ones. I did say countries more than there are more than 165 sovereign funds that exist currently. But these are the distribution. So what we are doing here today and what we are doing in Zimbabwe has been done many years ago by people who knew what they were doing. And we also did it in 2014, but it did not come up because operationally, because of lack of funds to put into the fund. That's the global distribution. So my point here is that when we talk about Mutapa, it has been done before. The next slide. So what is our vision is the sovereign fund of Zimbabwe, which is called the Mutapa Investment Fund. Our vision is very simple: to secure a successful future for Zimbabwe. It's very bullish. We didn't say for Mutapa investment. We want to secure the citizens of Zimbabwe's future. We look at ourselves as we aspire to be the two Josephs of this country. The Joseph from Beboyawi, who was able to mobilize food security. So we want to secure Zimbabwe's future. That's our vision. In our mission to achieve that, we need to preserve and grow wealth on a sustainable basis from the entities under Mutapa whom we are managing and looking after. And our values are very simple. We want to be accountable. We want to be transparency, excellence in whatever we do. We are committed to do what is right, if it is very difficult to do so. We want integrity and sustainability. And that's one of the reasons why we are here. Transparency and be open to the community, to citizens, to the university. And the Mutapa Investment Fund is a product of research by Sarah, State Enterprise Regulatory Authority Agency, which sits in the President's office, wherein they reach at a crossroads, they say, how do you transform the entities in Zimbabwe which are under government? So there are many schools of thought, either to have a central entity running those entities, SOEs, or to put them under Minister of Finance, or put them under government, who is under the President's office. The decision was therefore arrived that no, let's have a centralized authority or entity that looks after these entities for purposes of bringing efficiency, elimination of bureaucracy, red tape, and to ensure that there is efficiency and uniformity in running these entities. So that's what we did, and that's what we did, what was happening. And therefore, the fund is a transformative, it's a transformation agenda of government of Zimbabwe. And this is also part of the national development agenda of government of Zimbabwe. So what are our objectives? Objectives as specified in the act that I've just said, Sovereign Wealth Fund Act, section 4 of the act spells out our objectives very clear: to make secure investments for the benefit of enjoyment of current and future generations. So everyone is not being left behind, leaving no one and no place behind. The current and those people who have been born, they got a stake in this company or this entity. Support the development objectives of the Zimbabwe, including its long-term economic and social development. To support fiscal or macroeconomic stabilization, in particular to supplement the revenues of the Zimbabwean government. To contribute to the reserves of Zimbabwe from the net returns on its investments. So when you invest in an entity, tier 1, net 1 makes money, the profits, the dividends, so declared, come to the fund. The fund uses money to create more money for the future. So it means the CEOs and entities under Mutapa have got a big role to play in this equation. We won't be successful without making sure that those entities under Mutapa are successful. Therefore, our strategy that we shall talk about is linked and strategized. It's meant to link to that. Then to contribute to the revenues, as I've said. And then, therefore, the fund is looking at three things. It's intergenerational equity, it's macroeconomic stabilization, it's to generate economic benefits for the citizens of Zimbabwe. So it's a very simple objective, and very difficult to achieve, because it needs all of us to work together as a team. What is our mandate? Therefore, our mandate, which will be derived from the objectives as specified in the Act of Parliament of Zimbabwe. Our mandate is to manage the government entities under the fund and to provide financial and strategic oversight on the same. So on one hand, to manage them. On the other side is to provide financial and strategic oversight on all those entities. Therefore, the mandate entails: one, provide strategic oversight and active ownership of the state-owned enterprise under the fund, making sustainable and profitable investments that contribute to the wealth and creation of Zimbabwe, and also to minimize fiscal risk. We want to minimize fiscal risk, in other ways, that these enterprises should not go to get money from the budget, PSF. We need to create value ourselves. So our job is value creation. To drive economic growth, job creation, infrastructure development in line with the national development strategies and vision objectives, including Vision 2030 of becoming an upper middle income country. That's our aspiration, all of us as a country. Ensuring sound governance, transparency, accountability, and ethical standards and business practices. In leveraging on partnerships, joint ventures, in any other form of partnerships that you might so decide. The framework, what I'm basically doing is to take you the context of the Mutapa, starting with who we are, what is our objective, what is our mandate. The whole idea is give you the context. Context matters. So what are our governance framework? The fund adheres to good, sound corporate governance as a creature of the law, which derives its power and powers from the Act. The fund has adopted a framework of rules, practices, and ethical standards, including accountability and transparency, fairness, to direct and manage the fund. So at the top, we've got the board of the fund, with a very competent management at the board, at the fund, which is and the board oversight. So with a very strong board, strong management. In fact, I'm very proud of being the CEO of a very competent professional expert. They give us value for our money in this country. So I'm very happy as the CEO of Mutapa to lead a competent management staff at the fund, and we've got a very strong board of directors who are doing oversight of those people who are very professional. See, when you've got a good team of experts, if you don't have a strong board, there's all going to be a clash. And I see too many clashes in this country between the board and management, because the board might be political and management might be professional, and vice versa, or might become political and board. So I see that, but at the fund, we don't have that. At the fund, God has imposed us with the good experts, both the management and the strong board. So we thank God for that. And we thank the President for his appointment of those board members, whom I can say today to you in this public lecture, they are strong individuals. They're very competent, and the staff, they are good. Thank you. And the fund is subscribed to transparency. I've read many articles talking about the transparency of the fund, that it's a fund for looting. People here, they say what they want. It's a good country. Yeah. I like that. I like that. But if you look at the act, if you look at section 25 of the Sovereign Fund of Zimbabwe, to provide that the account of the fund shall be audited on a terminal basis by persons registered as public auditors in terms of public accounts in the Auditors Act, Chapter 22, 2712. And our current auditors are Grant Thornton. And we work very closely with the Auditor General. Because after the audit, we also would provide the same information to our Auditor General. But this is the position. In section 49 of the Public Finance Management Act, provide that public entities, including ourselves, must maintain comprehensive records of financial transactions and prepare quarterly financial statements. The accounts must be audited and submitted to Treasury. And the minister referred in the Act is Minister of Finance. Minister of Finance acts two roles, as the Minister of Finance and also being the Treasurer. And they are subject to parliamentary scrutiny through authority vested in Parliament in terms of the section 119 of the Constitution of Zimbabwe. So people will say, I know this fund is law unto itself. No ways. Can't be law unto yourself when you're in Zimbabwe. You've got Constitution of Zimbabwe, you've got the acts that are there. So today I'm just here to demystify that myth that this fund is a law unto itself. No, we're not. And Parliament's role in holding IMF and its entities to account is therefore firmly entrenched in the relevant laws, including the Parliament, including the Constitution. And the tabling by the Minister of Finance of the funds reports in the Parliament ensures that the Parliament has got oversight on all the entities, including Mutapa Mutual Fund. We have already given the Minister of Finance our annual report for 2024, as we work on the 2025 audit for him to do what is right, to do the needful. And therefore, MIS subscribes to this, and also is subscribing to Santiago Principles. Santiago Principles, there are 24 principles, which were developed by the International Forum of Sovereign Wealth Funds in 2008 in Santiago, to promote transparency, good governance, accountability, and prudent investment practices of managing sovereign wealth funds. We are also a member of the African Sovereign Investment Fund, ASIF, of which I serve on that forum as in the executive committee of that forum in Africa, which is also an affiliate to the international one. The fund is accordingly, because of its transparency, we've also therefore publicized our annual report with the financials for 2024, which was done expeditiously, which was done for a record time, because we started our work in May 2024, but by the end of the year, last year, all those accounts had all been audited, joining the Sovereign Fund as it started 2014 up to 2024. All the numbers are there, and the record is for everyone to see. And if you have any question on that, we'll be very happy to entertain any, if there are any questions. And in those, the next slide, please. The performance is highlighted in the annual report of 2024. We showed that the fund has got assets under management, gross value of 60 billion, with a fair value of 14.7 billion, and that within the fund, the fund by itself had income of 11.9 during the first year of operation, and made a profit of made 80 million. And of course, if you look at the fund, we also give the statistics which are very relevant, like gold production in tons, because we've got the fund, its assets, they are one of the largest producers of gold in this country. So just also for Fidelity, all the gold comes through Fidelity Gold Refinery, which is under the fund. And the gold that we got, which is a very important statistics, was 36 tons, 0.4 in 2024. In 2025, the same gold production which came through Fidelity had gone to 46.7 tons. So the country is doing very well on gold, but the prices of gold is also going up. And in terms of a billion of liters that came through the pipeline, which is unknown, was 2.3 billion liters. And last year, it was 2.7 billion liters. So we are expanding the pipeline so that this, we can get more money revenue from that. And the electricity that was produced and sold to people, and of course, the number of people, we've got 24,000 people within the companies under Mutapa. So we are a very important employer as a group of companies under Mutapa. 24,000, and we want to increase that number, is we increase production and it increase our work streams within our institutions. Now, coming to Mutapa, this was the context of Mutapa. What is our architecture? Our structure in Mutapa. Mutapa is divided into 6 clusters. As management, for purpose of easier to manage, we've divided the fund into 6 clusters. And what is on this slide is everything that what we do. So you see money, you see the land, you see electricity, you see infrastructure, you see mine, and you see the real estate. Next slide. So the structure, those just give you a rundown of on the energy and trading cluster. That is where we've got Orex, Fidelity Gold Refinery, Petrotrade, Zesta, the power company. That's where they are. So that's energy and trading. The energy being Zesta and that didn't know it should also be here. And the trading being the gold that comes through this one. And then the second one there, the financial services, which is basically our banks and financial institutions, including Homely, and the Esco Credit Guarantee of Company, ECGC, they're under the financial. These ones, we would 100% shareholding in these entities. And the next cluster, which is the third one, is agriculture and industrial. That's where for allied timbers, other seeds, called social commercial of the company, IDC, side of food. Again, 100% owned by the government through Mutapa. Then we've got ICT and logistics. This is the 4th cluster. We have got this is your infrastructure cluster. We've got your Air Zimbabwe, the National Oil Company of Zimbabwe, because of the infrastructure that they provide for fuel. That's why we've got NRZ, Powertel, Telso, Net1, Tier 1, and the buses, Zupco. That's where they are. For the minerals cluster, we've got Default and the Kuimba mines. And in the Kuimba, our shareholding there, as you can see, 63%. Yeah, 37% is owned by the interest groups, which include the farmers, including DPC, Public Service Commission, IPEC, they are the 37% holders. So we would, but we manage on their behalf. We also have interest in what called investment associates, where we don't have 100% control or more than 50%. We are also in Zimri Holdings, 33.8%. Kotko Holdings, which is Kotko Cotton, 37.1%. People who think that Kotko is 100% owned by government. Government owns 37.1% of Kotko. But we run as if it was 100% owned by government because of the socio-economic aspect of cotton. Mineral resources were in Wange, 36.8%, in Julico. Then we also have financial assets. We are also in CBZ, 70.7% of CBZ owned by the fund. In the energy and trading in Victors, we are in the Victoria Falls Stock Exchange, 14.8%. Those are the assets that the fund is looking after. So we are diversifying the portfolio. We need to sweat it. We need to work on it, create value from it for the benefit of future generations and ourselves who are still alive. So we did a SWOT analysis for ourselves and what we are in the platform. So when you look at ourselves, after we have looked at these companies and our influence structure, where we are coming from, to say what's come up with the strategy, we need to say what is our weaknesses and our strength. We found that we've got more strength than the weaknesses. We've got a diversified portfolio, with a very strong government support, strong balance sheet. When you combine all these companies, potential for high returns, the long-term investment horizon, highly skilled manpower, the fund and the board, and there's no bureaucracy, a red tape in the fund. Zero. We don't create one. So I'm trying to give us today or things tomorrow to get to that point. Because we cannot afford that when you're running a business today, will take you 6 months if we response as we shan't zero. So we have no bureaucracy to find. And I also pray to God that I don't want you also the same bureaucracy crept into us. Want to remain the same yesterday, today, tomorrow. Opportunities are in abundance. With abundant natural resources, I think we've got 30 to 40%. I don't just say be on the conservative side. I think over 30% of the resources under the natural resources in this country, they are quite significant. In asset security lines, we can create them. Farming, mining, mineral, the prices are going up. Economic recovery prospects are good because of stability which Zimbabwe is enjoying, regional integration, commerce, SADC, everything. So weaknesses, we only identified 2. Maybe we're lazy, but that's what we identified. After, I said the team is the competent, the experts, but we identified 2. Then the capital, growth capital in the country. So we need to look for it. But that weakness become an opportunity for us. Lack of value addition. We normally produce and sell goods in the raw form. And threats, climate change, as you can see, it's a real threat. Global economic conditions, geopolitics, and everything, that's where they come. The competition for investments by other countries is a threat to us. Again, the become opportunities because we need to know what we are doing. So, informed by the mandate, informed by the objectives of the fund, informed by our diagnostic assessment that we did as a fund, informed by the threats, the SWOT analysis, we then come up with a strategy. for the fund. And for whatever it is worth, we came with a very simple strategy. We just call it fire. You call yourself heat. I was saying to Professor Kamno, whom are you hitting here? but he said, it's so we came acronym for our strategy, fire, which means we need to fix, we need to invigorate, which is reviving, we need to reinforce, which is strengthening, and we need to extract the value more companies. So when I come to you, Mankala, in tier 1, we are coming with a fire economic strategy. What do you need to fix in you? What do you need to revive in you? How do you strengthen you to get money for the of the mouth? It's called extraction. We are very clear on that. So whenever we come to you, to anyone, we are here, it is yes, sir. We are saying, what should you fix? What should we revive? How should you strengthen you? By putting prepaid meters to everyone. Don't be afraid. So that we can get the value, so that our debtors are in balance. Not to have people who don't pay electricity, but they use it. Every day people complain, there was load shedding. Did you pay your money? I'm not bad on my postpaid meters, but I think I have it. So those are going to fix. So that is fixing, sir. And we also went further to say, you know what? Now that you've got this fire strategy, we also looked at the Boston Consulting Group metrics. As you say, at universities, there's a reservoir of information. You also need to study these things and say, how then do you combine these things? So we looked at the Boston Consulting Group metrics for business, and also our fire strategy. The two of them, we combined them and came up with that very simple illustrative diagram, whereby we say we've got stars within the group, with cash cows within the group, we've got crescent marks within the group, which I've given you already, and we've got dogs within the group. That is the categorization under the Boston Consulting Group metrics. So we use that same metrics to categorize our entities. And we said, who are the question marks? The likes of Telecel, a question mark. Silo, a question mark. CSC, it was a question mark, but then we started. And who are the dogs? No, sir, I was going to become dogs, but I love dogs. I used to keep dogs at home. Musha, Zeku, Fremantle. Nowadays, I keep a lot of them for just safety at home. But when I think of dogs, I think of big dogs. These ones you need to feed so that they don't take the musha. So your economic enablers, they are very important. They might be dogs. So they say in English, keep sitting dogs lie. No, I don't just hold this up. What happens? No, so some of these things don't temper them now too much. So in our dogs category, with the likes of NRZ, Zuko, Zimbabwe, we need them. We can't kill them. Can't send them to SPCA. No, we need to keep them. We need to feed them. How do you feed them? This way now, the stars in the crash cows car. The question marks in dogs need robust fixing. And then the reviving strategies to grow them and unlock value. On the other side, the cash cows, the question marks in dogs need robust fixing. And then the reviving strategies to grow them and unlock value. On the other side, the cash cows, you need to strengthen them to expand their operations and to provide support to those dogs and the question marks. So you get money from this, you leverage the balance sheet, get say from NOI, Part of which goes to the small dog, or to the question mark to silo, so they become not so good company. So that's why the government of Zimbabwe put in place Mutapa. This, when the companies being run in silos, you can have that 360 degree. Now we have got it, therefore we can leverage and optimize the balance sheet within. That's what we are doing. So on our cash cows with Noik, today the gold refinery. Noik has got a monopoly capital called the pipeline from Beira to Harare. And we need to leverage on that. And that pipeline, companies that want to bring fuel, they use the pipeline. They pay about 8 cents per liter. That's why I said what moved that pipeline last year was 2.7 billion liters. And therefore it's become a cash cow. Fidelity Gold Refinery, they don't mine gold. All the gold comes from somewhere, it goes through refinery. Therefore, they don't make losses. Therefore, they are our cash cows. POSB, they make money, they are our stars. So it's net one and tier one. Tier one, net one, they are affected by legacy debts. You know, we used to have PTC long back. PTC was split into two, tier one and net one. The loans that were there under PTC are still being assumed by these two, carrying the burden of PTC, post telecommunications. It was very long back. And therefore, those debts are the ones that affect their comprehensive income, the bottom line. Otherwise, it's a doing very well. So, what is our focus? Our key focus areas is Mutapa, given the SWOT, given the categorization of companies. Therefore, our areas of focus, when you look at those, is basically the next slide is the governance, financial performance, operational efficiency, sustainability in operations, human resources, strategy development, and the capital growth, which is capitalization. Those are our key focus areas as a fund. And to date, we've done quite a lot. We've strengthened the board effectiveness where necessary. It's continuous, it's not an end. We have insisted that there should be timely production of audited financials in line with the statutes of Zimbabwe. We are working on turnaround strategies for all the entities in 3 categories: short-term, medium-term, and long-term strategy for all the entities. We're working on improving performance and in capital sourcing and injection of capital into those companies. We are an active investor and we are an engaged shareholder. We don't want to leave anyone behind. There is nothing too small and too big for us to consider. We are there for our entities. And so far, what we've done, is this still coming into strategy? Yeah. What we've done on our strategic initiatives, starting with the mineral cluster, we are restructuring the mining cluster, effective now, to ensure that we are going to see if we look at default in Kuweba. I'll give one example of Jena mine. Default has got 15% of Jena. Kuweba has got 85% of Jena, but all of them are under Mutapa. So we are now restructuring that mining cluster so that we come up with 5 companies under the mineral cluster. So we're now going to have Mutapa Gold Resources, Mutapa Base Metals, Mutapa Energy Minerals, Mutapa PGMs, which are platinum group of metals, and the Mutapa Frontiers. So we won't have the Kuwebas, the defaults. We now call them by what they are. They are our entities. Gold, so they focus on gold and say, you are the CEO of the gold, of Mutapa Gold Resources. You are the CEO of Mutapa Base Metals. You are the CEO of Mutapa Energy Minerals, your lithium and your nickel. And you are the CEO of Mutapa Platinum Group of Metals. In the front years, these are new ventures to come. So when you acquire other minerals, might be rare earth, tomorrow you might discover others, basement, other phosphates, you become under the front year. So we have room for growth. So that's our structure. How far have you gone on this one? The Mutapa Gold Resources is now operational. The Minister of Finance has approved these ones. Government has approved them, and all this has been approved. So that's where we are going. So this, and the board approved these things. And my job, I'm only paying for talking. The management works, the board approves, then I talk. This is a very simple job. One of our board members says, thank you for approving this thing. So you see, when you approve, I just talk. I take the time away from everyone and I talk myself. So thank you very much for according me that responsibility of telling the nation, telling this public lecture that is what we are doing. In terms of ZESA, energy and trading, next slide. Government has approved that we rebundle ZESA. We had unbundled it. You have ZPC, ZETDC, ZESA Holdings, the like. And because we want efficiency, we've rebundled and reorganized ZESA. Again, this has been approved by Cabinet, and I think Zimra is now approved the restructuring of this entity again. So we're now going to have a ZESA Private Limited with 100% ownership of Zent and 100% ownership of PowerTel for Zambia. So ZPC, ZATTC, ZESA Holdings, they're all under ZESA Private Limited. So all the rest, they become divisions. So a division of production of electricity, which is done by ZPC, division of the distribution of energy in the city of Biafra. So we are now in the process of informing the creditors, the lenders, and all other stakeholders on this matter. So we've again moved. So at Mutapa we move quite a lot. Because for the very competent management, the competent board. So we move. Knowing we are working with them to increase capacity. The idea here is to increase capacity to 5 billion liters per year, which is about 400 million liters per month. It's happening. It used to 1.8, now it's the capacity 3 billion. Want to move from 3 billion to 5 billion. Because as the economic activity increases, more fuel is moving onto the pipeline, and we also want to minimize the usage of trucks on our roads. At Orex and Fidelity, we are consolidating those entities into one, so that Orex becomes a division of Fidelity Gold Refinery. Because all of them, they are refining, they are value addition. They're adding value on gold, they're adding value on diamonds and gold. So they have become one entity. And they're all under 100% owned by ourselves. Agriculture. Our initiative there in agriculture is to ensure that the fertilizer value chain is realized. So we are capitalizing and refurbishing Adoroa, Zinfos, ZFC, so that at least we can produce the basal fertilizers in this country. Fertilizer is a very important input in agriculture. For food security, we need enough well-priced fertilizer. In the stable chemicals, we are working with the Masawara to ensure that Mutapa becomes the major shareholder through rights issue. So that we also have the fertilizer value chain of the AN top dressing. So when you look at this fertilizer value chain, you've got two types of major fertilizers, the basals and the AN. Of course, in between of what your soil, all those things, they are all here. Because we love Zimbabwe we want Zimbabwe to achieve its food security strategy. You can have rains, they are coming, but if you don't have fertilizers, they're not very good. At IGC, industrials, we are reorganizing IGC. So that we don't have too many layers of bureaucracy. We've got IGC as a group, Chemblex as a holding company, and all babies under that again, hey, complicated. So we suffer from simplicity of the fight. One simplify things. So that's what we're doing. Privatization of revitalization of cold storage company. Here we removed the company from joint venture, the bolstered beef. We then went with the business rescue practitioner, Mangudya. In the company, we removed it from business rescue or administrative. It's now 100% under Mutapa. And last week, we started advertising for a turnaround strategist, more like a consultant management, who's going to work with us, give him the funds to go forward. To understand all the abattoirs that are here, the slaughterhouses, whether it is the Bulawayo, Chinoi, Maswingo. We need all those to be operational. And the CSC, by the way, in terms of sustainability, the life of CSC is longer than that of a life of mine. This is continuous. So we talk about the ESG, environment, social, and governance. You see, the more it's so those farmers who are occupying CSC properties, we're going to convert them to our growers. So they grow for us the beef. But what we want at the CSC is the beef. So we want more beef to come from those farmers. And that's one of the areas that these strategies are working on. So we are very clear on our intent. At NRZ, we are rehabilitation of NRZ. We've got again short-term, medium-term, and the long-term plans. In the short term, we have requested, and we are doing that, we funded NRZ so that they start hiring or leasing locomotives. At NRZ, we need 4 things: locomotives, wagons, to repair the track and signaling. And that is good work in progress. Working with the CFM, and others, working on the track, and on our part, we are providing funding to get some locomotives for now, and also refurbishing those wagons that are at NRZ. We've got a very good, competent journeyman engineers and people who work very well in these yards at NRZ in Bulawayo. So they can fix those ones. Sometimes that's a bogie that was missing onto the wagon. So they are pushing those. They can do about 60 wagons per month to repair. So they need a bit of capital, which we've given them. They work on it. And you've seen it also on the rail, on the track, there's some of the traction. Those ones are listed locomotives. So they're moving. You might not see it by a human eye, but in terms of freight, has moved. We've reached a low of 1.8 million tons per year. We're now going upwards again, which is the best. So our speech is that, and our message is that whatever we bring with the bottom, we cannot go down in faith. We can only go upwards. And upwards is our limit. There is no limit going upwards. At Zupo, we are purchasing buses, procuring buses, and we're also going to long-term plans with some suppliers of kits, so that Devin and the Willowville also produce buses and trucks for Zimbabwe. And this is what we are doing. At the Air Zimbabwe, we are reviving them. leasing aircrafts so that they can increase the frequency of their flights, both or 3 times locally, which is Zimbabwe, regionally, and going international. So that's our strategy. And the CEO of Zimbabwe is there. You testify, in fact, this is a good work in progress. He's already using the ATRs from fund that is using for the domestic flights. And we're using our umbrella. Government has given us the authority to sell the 777s, whose money will then use it to put a deposit for new small aircraft for domestic. And we are putting in place a facility to lease, hire a bigger plane, one of these Boeings, to fly Harare to London, a route, and good work is put in this place. And I was advised by the chairman of Air Zimbabwe, the CEO, that by June of this year, or before June, they wanted earlier. I said, okay, do your earlier, but for purpose of my public lecture, I shall just say by June, we need to fly around London route. So at the end of the day, that route is one of the most lucrative routes in Africa, because just go direct from here into UK. Before, we used to export our horticulture in the morning or in the evening, in the mornings or in the shops, UK. So this one is coming. And we thank the board and management for this observation of what they're not doing. Then at Telecel, we're reorganizing. Telecel, we put it under, it was put by the board under administration so that we can sort it out. We've got very good plans for it. The plans that God has given us, which are good plans to ensure that it prospers. And this, we are working on it. And in financial services, we're consolidating the insurance business as a strategy, and we're capitalizing our banks so that they become a well-run and capitalized bank to provide funding. At the real estate cluster, we're consolidating our assets. Because we have too many properties under CSC, NLZ properties, AFC properties, IDC, Sunway, with the Homelink, and new ventures. So we are consolidating them. Eventually, down the line, we also come up with the REITs, real estate investment trust. So that one is the destination. We want to unlock value from our real estate. We are also working with some companies that are having difficulties in this country to try to really resuscitate them. We are still in a conversation with the better bricks, which is under administration. Our argument is that we cannot have a country without its bricks. Most of the bricks in this country, they are being produced by foreigners. It is not sustainable for the country, because one day you might end up importing the bricks. So we are still in good conversation with the business rescue practitioner who is working on better bricks. And there is the rest of other entities that you are working on. Apart from Telecel, also working with the Africom to see how best we can manage the backbone to communication for the country. So we have a number of things. As I go towards the end, we need to look at Mutapa's contribution in the national economy. When I look at all this that I'm saying, the sum total of it is that we need to contribute positively to the economy. And the best way to show our contribution to the economy is what is spelled out in the National Development Strategy number 2, blueprint. In the blueprint is very clear, paragraph 334 of the NGS 2 blueprint, it says that the fund will leverage its assets to secure funding, support NDS2 priorities, and the fund targets raise $1 billion to support NDS programs, not our companies, but over and above our entities for the economy. In order to uplift the livelihood of people in Zimbabwe. It also says on 336 paragraph, in this regard, Mutapa Investment Fund will reveal on its grouped balance sheet, which I spoke about earlier, of over 30 enterprises transferred from line ministries to the fund to raise financial resources for under NDS2. It says the process for the revival for portfolio companies under its mandate realizes dividends as a disposal, bond issuance, we channel towards foreign exchange reserve accumulation. The expectation, there's also another expectation that the Mutapa Fund will, during NDS2, be required to leverage these assets to raise capital to invest and grow investable surpluses under the fund. In other words, to come up with a fund, a stabilization fund for Zimbabwe, which will be used during the times of need and or for future generations. And it also says on 339, improved performance of assets under Mutapa will lead to increased contribution to fiscal, job creation, export growth, service delivery, among others. The fund will under NDS2 be required to engage both the local and foreigners or foreign investors to mobilize and deploy capital to underperforming portfolio companies, thereby reducing fiscal risk and ultimately the need for budget support from our entities. We need to be weaned out from the budget. So in short, from an economic perspective, we are saying the trickle-down effect of MIF fire strategy should come up with this. I don't know whether that is there on the screen. We are saying when Mutapa works very well, we need to improve performance of the companies under Mutapa, which will lead to increased contribution to fiscal, job creation, export growth, and service delivery, which will lead to more resources for the economy, which means for treasury and wider economy, and it leads to infrastructural projects being done, devolution in the economy being done, social services being attended to, and the creation of the sovereign wealth fund for Zimbabwe, so that we leave no one and no place behind in the economy. In conclusion, my conclusion is in 4 parts. That what are the desired outcomes or desired results if we do what we are supposed to do as Mutapa. You are supposed, if you say Mutapa is successfully done its job, will be measured against these 4 items. The first one, we expect Mutapa, if it is performed well, to have improved corporate governance across its portfolio companies. Colleagues, I'll be very honest with you, which I am always do every day. The major elephant in the room or in the country is about corporate governance. When we did our diagnosis assessment, corporate governance becomes critical for us to do, which means the relationship between the management and board and shareholder, and the entities with accountability, entities with responsibility. This is the major elephant in the room in Zimbabwe, corporate governance. Sometimes we've got too many chiefs without Indians, so to say, whereby companies are overmanaged and underlaid. That's the major problem. When the companies are overmanaged and underlaid, for the problem. It's called corporate governance. We are seeing it every day. We deal with them on a daily basis, and we have no apology to make on that. But that's what you do. That's why when you say you are married to them, we know what it is. Not only under Mutapa, I said in Zimbabwe. I'm very careful about that. The other second one is to improve service delivery of portfolio companies under the fund. We need to improve our service delivery. I keep on talking to the acting CEO of ZES that one of the key focus areas of service delivery is to ensure that when there's a fault, it's attended to timeously. Because the faults, they generate income for us, which called salary. So if we look at faults as if they are difficulties that are not necessary. No, I know we are selling a captive, a monopoly product, but you know what? We need to have service delivery at the core for our business because we are delivering to people. That's where we get our money from. Improve financial performance of companies under the fund. We want to say after 5 years from now, that most of our entities, right now, about 50% of our entities are profitable. Another 50% is loss-making. One said that after about 5 years from now, 75% or 80% of our entities under the fund are profitable, except those ones who are doing social programs where there's just no enablers, but they need to break even. You can't do it at all costs. We want to have improved contribution of these companies to Zimbabwe's economic development, wherein we now establish the stabilization fund from those revenues that are coming from the companies, dividends, so that the current and future generations are looked after. So, in short, what we are saying is the formation of Mutapa Investment Fund was the best thing that this country has done. Transforming it from the Soros Fund name to remodel it was very good. In that the companies under the fund should perform to become beacons of good financial management, become beacons of the seed capital for the fund, so that this country, we have got a blend of resources, we harness those resources. Zimbabwe is too rich. God has given us the blessings of minerals, the blessings of people. What we need to do is combine our expertise, the resources, to make money for the country, not only for ourselves, but also for the future generation. Gone are those days when Zimbabwe can be abused by other investors, when you yourself are very good investors. When I look at all of you, you are good investors. You are very intelligent people, you've got expertise. Let's put those expertise to good use for developing Zimbabwe so that we leave no one but everyone going forward being